Hello traders, welcome to our new topic of candlestick patterns. Here in this lecture you are going to learn three important candlesticks, and these three important candlesticks are going to provide you the entry points. You have to trade only on these three candlesticks only. There are lots of types of candlesticks. We are not going to look for the entry point for those candlesticks. So what are these three candlesticks? We are going to look one by one. Now we are going to move ahead to our type 1. This is the Marubozu candlestick. If this sort of candlestick is formed near the Ginn levels, in the upcoming lectures we are also going to show you with the live market examples that how we are going to place the trade with the help of this candlestick patterns. So here you can clearly see this is the Marubozu candlestick, and at this Marubozu candlestick we don't have wick at the upper side or at the lower side. That's why this candlestick is called as the Marubozu candlestick. So at this bullish candlestick we are having the high and the close price at the same price level, as well as we are having the low and the open at the same price level. The next is the bearish candlestick. So at this bearish candlestick we are having the open and the high at the same price level and the low and the close at the same price level. Remember this point, if these two candlesticks are only formed, then only we are going to place our trade. If this bullish Marubozu candlestick is formed, then we are going to place our trade for call. If this bearish Marubozu candlestick is formed, then we are going to place our trade for put. The next candlestick is the simple candlestick. This candlestick is having short wicks but the long body. At this candlestick we are having the open, close, high and low. Remember this point, for this candlestick we need shorter wicks than the body. Both the side I am talking about, not at the one side. At the both the side we need short wicks. This was the bullish candlestick. Now we are going to look for the bearish candlestick. For the bearish candlestick we are having the open, close, high and low. The same point what we looked in the bullish candlestick, here also we need the shorter wicks than the body. So if the market is going to form like this candlestick near the Ginn levels, then that is your entry point. Now we are going to look for the next, that is the type 3 rejection candlestick. So in this candlestick what is happening, we are having the long wick and the short body. So here what is happening at this bullish candlestick, this is the open price, this is the close and the high which is at the same price level, and the low is here. Next we are going to look for the bearish candlestick. Here we are having the rejection again, then here we are having the high, open, low and close at the same price level. Now remember this point, what is happening here at the bullish and the bearish candlestick, this wick is long but this whole wick represents the presence of buyers. That's why if we are going to look according to the price action or according to the candlestick analysis, it tells at this candlestick there is only presence of buyers, there is no presence of sellers. At this bearish candlestick, the upper side wick represents that there is a strong presence of sellers, and the body also represents that there is a presence of sellers. So this whole candlestick represents that there is only the presence of sellers, there is no presence of buyers. That's why if like this candlesticks are going to form in the market near to the Ginn levels, then only that is our entry point. Now we have to look for the important point. So till now what we have learned is that the three types of candlesticks. These three types of candlesticks are very important for entering the trade while using the Ginn levels or while using the price action strategy, which you are going to learn in this course. Remember, you are going to place your entry only after the proper candlestick formation, that is after the candlestick closing. Remember this point, not to judge the candlestick before the closing, as well as don't hope the candlestick is going to close in your way. What happens, the candlestick has gone and reached very high, you think that there is a strong presence of buyers have entered and you immediately place your trade, and then after once you place the trade there is a huge rejection from top. it represents that there is a strong entry of sellers. So you were hoping that candlestick is going to close with the strong presence of buyers, but at the end the candlestick represented that there was the entry of strong sellers. And what happened majorly, the body exactly closed below the resistance, which signifies us that the market is going to go in the downside. That's why remember this point, never hope that the candlestick is going to close in your way only, and not to judge the candlestick before closing. The next point tells us if you want to live long in trading, you have to be a safe trader than the risky and the aggressive trader. This point is very simple and everyone can understand very easily that if you want to live long in trading, you have to be a safer trader rather than risky and aggressive trader. Your risks should be minimal and your profit should be huge. There are lots of traders who think that I am a risky trader, I am an aggressive trader, and it gives them the self-appreciation that I am a risky and the aggressive trader. But remember this point, if you want to live long in trading, you have to be a safer trader. It gives the self-appreciation to them to show others that I am a risky trader, I am making huge losses, with that I am making the profits also. But if you are going to be a safer trader, you are going to make small losses and huge profits. There will be the day when you are going to have the proper analysis that how to trade in the market, and this is not going to come from us nor from any book. The psychology comes from within. You will read thousands of books, but after trading into the market only, your psychology is going to get changed. If you are just reading the psychology books to before placing any single trade, it is not going to help you out. The psychology is built up once you start your trading into the live market. What happens, most of the instructor tells to the traders, those who are beginners, that just do the virtual trade analysis. Means what, the market is at this position, you have to analyze that if market was at this position, what trade you will take, whether you are going to take a call or whether you are going to take a put, means whether you are going to go for long or whether you are going to go for short. That kind of trading we don't need to do, because this is not going to help for developing the trading psychology. It is like swimming in a swimming pool without a water. So that's why remember this point, whenever you are going to dive into the swimming pool, then only you are going to learn that how to swim. So you just have to take one lot and you have to place your trade. This is going to affect and develop your trading psychology. Reading thousands of books is also going to help you out. I am not saying it is not going to help you out. It is going to help you out, but it is going to have a boost only when you are going to place your trade in live market rather than doing the virtual trade analysis. Thank you.